Consumer Spending Index, like I've mentioned, is meant to be a reliable indicator of the current state of the real economy. The third quarter Consumer Spending Index was derived by face-to-face interviews of approximately 1,200 individuals and approximately 220 retail businesses across the country in various urban centers such as Nairobi, Mombasa, Eldoret, Kisumu, and Nyeri. Most increases in income were attributed to people getting side hustles, and then to an extent people also having pay increments, whereas the majority of decreases in income were attributed to struggles in terms of business and also investments.
The issue of women's spending has been brought up by this survey several times over, because in the past we've seen that actually the spending is driven by women. Because in the past 3 quarters that we've carried out the survey, we've seen that women are actually spending more, but for the first time round, women are actually spending less. And then if you also look at the overall index, there's actually a little depreciation. More people are spending more, but there's a depreciation in terms of if you compare this quarter and last quarter. So what I can say for now is probably that the spend is actually being driven by women, because when you find women spending less, then all of a sudden the index is depreciating.
We found that for the first time this year, the individual spending sub-index declined. It had a decline of around 3% in the third quarter of 2024. That was the first time we saw a decline in individual spending index this year. So overall, the ILAM Consumer Spending Index in the third quarter of 2024 increased by 30%, largely driven by increase in retail business sales, which offset a slight decrease in individual spending.
My comment will be on income, because when we look at someone's income, it's going to go to spending, debt, savings, and savings are called savings stroke investments, right? So when spending is heavily impacted, when we find we're spending more on our basic needs and maybe what we used to call discretionary spending has also been forced to increase because of the price of goods and services, then of course it's going to impact on the other things. It's going to impact on debts, and it's going to impact on investing. So as an investment house, we are of course very cognizant that that is affecting the people's savings behavior. But I think it's something we'll continue to watch and see how it goes, because immediately the two are impacted, then of course savings and investments is going to increase.
So I think for me the takeaway is that we will need to bring out a lot more in terms of savings and investment. Of course for us it also has a direct impact because we're an investment house, and it's important for us to be able to keep track of what's happening in terms of trends, in terms of savings and investment. So that's excellent feedback that we receive, and it will enhance and enable us to continue to improve on the survey in terms of the aspects that we're covering.